Hey guys, how you doing? So Dan from Trading with Dan here. So I know you guys that follow my channel might have realized that I've stopped doing a lot of these news article videos recently. I was doing quite a few, probably like 4 or 5 a day at one point, and I've only actually been doing my trading videos recently. I've been keeping on doing those. But yeah, I've been a bit busy with stuff, so that is the reason for that. But there are some things that have been going on, as you guys are probably fully aware, that I just probably have to talk about now. There's so many things that are going on at the moment that are ridiculous, especially in the financial system. And yeah, so I probably have to vent a bit on this video and tell you guys about some of them. So the first one, this is the first video, probably a few over the next few days, but the first one, I think, is one of the main ones, is basically them bailing out companies that have not basically saved for a rainy day. And that's one aspect of it, but the other aspect of it, there are companies that have made a lot of profit over the past five years or so, and what they've done with all those profits is they have basically bought their own shares, so basically share buybacks. And this is what has been pumping the market a lot over the last few years. And just to put it in context for you, share buybacks used to be illegal because they are basically fraud. If you're a company executive, you will get paid often with stock options, and so basically it's fully your only real interest in the business for your own personal financial gain is to goose the share price basically. And the way to do that is to take on debt and also reinvest your profits. I call it invest. I use that term lightly, but to pump all your profits and then borrow debt because money is cheap, especially for these bigger corporations, and then just buy your own shares. And then what that does is it makes your earnings look like they're going up because your earnings per share is going up, but that's not because your earnings are going up. That's just because the amount of shares is decreasing because you're buying them and taking them off, basically off the float, off the share float. So the only reason a company would do this, legitimate reason a company would do this, and there are great companies that do it. Like very recently, there's a company called Sandstorm Gold, which is a royalty and streaming company, and these are really good business models anyway. I mean, you guys can look into it yourself. But their share price got hammered down when we had those gold liquidations a few weeks ago. That flight to cash, basically that liquidity event. And what happened was the Sandstorm Gold share price went from about $9 to about $4.50. So it basically halved in price. So the actual executives at Sandstorm Gold, they basically did do share buybacks at that point, because that was they know their business, they know what their business is worth, they know what their future value is worth, they know their business better than anybody. So they knew that buying those shares was about the best use of that capital they could do at that time, because they know what the share value actually was, because they are the company, they know it inside out, they know everything about it. So they did share buybacks and bought like a few million shares at $4.50 because they knew the shares were undervalued. So that's how you should do share buybacks if you're going to do them. And it doesn't have to necessarily be like a crazy event where stock markets all got hammered and then you buy your shares. I mean, stock markets can be in like normal bull markets, but you also then have free cash flow because you're doing well, and you do also then know your shares are still undervalued based on your actual valuation metrics. Bearing in mind that you know everything about the business, and then you can buy shares then, and that's still acceptable. It's not like, oh, you just buy them when the shares don't go down. You can buy them when the shares are going up if you still think they're undervalued. You've got lots of cash, and it's a good investment. But this is basically the opposite of what most companies did. So what most companies did, the business wasn't doing very well. The shares were overvalued, not undervalued. They were overvalued, yet they kept on buying them, making them further overvalued, and then kept buying even more of them. So that is the opposite of how you should do it. And again, like I said, the only reason is for executives and shareholders who are other mainly rich people, to just make loads of money. And if you think about, if you're running the actual business as a business, and your income, your profit, your pay, your money you got, it's not a salary, your pay that you got from the business wasn't based on that, you probably would be actually just saving that cash on the balance sheet, and not taking on debt, with the pure simple reason of only buying shares back, because you know that to survive like some economic shocks in the future, say for example what's happening now, you need to have spare funds for a rainy day. So the crazy thing about, I mean, like you can imagine like a company is like a person. It makes decisions like a person, and people are selfish and companies are selfish. People don't plan for the future, companies don't plan for the future. I mean, even countries, I always use like an analogy of countries being basically the same. Basically, countries being like a person. They do what's better for them. They're selfish. They have tantrums. They do you know what I mean? They're irrational. They basically do what's best for them. I mean, it's like, because basically companies are run by humans, countries are run by humans, and humans are run by humans because humans are humans. So it's all basically the same human behavior. So why this is so particularly bad is that obviously these companies decided to buy all these shares with debt to goose the share price. Executives could get rich, which used to be fraud, and basically is still fraud, even though obviously it's not technically classed as it anymore. And now they are basically having to get bailouts. So why should the executives of these companies who basically committed fraud then be allowed to then get bailouts from taxpayer money, basically, because they made, and it's not like they made a business mistake. It's not like they made, it's not like it was a decision mistake. It was just purely they were committing fraud, and that's left the company heavily indebted with no substantial cash on the balance sheet. And then now they need a bailout. So I mean, these guys should basically go to jail. The company should go bust, and then the assets could then be bought cheap by basically either other companies that were more responsible with how they were running themselves, and then that would obviously happen. Then would come out of this economic like collapse, this financial freefall at the moment, would come out stronger and better off. And that basically is capitalism. You have to have failure, you have to have bankruptcy. It is part of free market capitalism, because if you don't have it, like we didn't really get it in 2008, we didn't really have capitalism. The banks basically took loads of risk. I mean, they weren't necessarily doing share buybacks, but they were taking on lots of risk, which they shouldn't have been doing to make money at the time. Inflating bubbles in various markets, just like the share buybacks were inflating bubbles in their particular share prices, and they then got bailed out. So obviously that sent a signal to the market that you're going to get bailed out. It's basically, you just got to get as big as you can, as quick as you can, take on as much debt, and then you will then be more likely to get a bailout. So for example, you get these companies that are called fallen angels, that basically debt is basically falling out of investment grade to junk, and then those guys are having to get bailed out. So it is ridiculous, it is fraud, it is criminal. And then let's talk about the other aspect of it. So these businesses don't need to be bailed out. The government and the central banks are pretending to use an excuse that we've got to save the jobs, we've got to keep the jobs in the business, that's why we're doing it. But most of the money isn't going to go to the people to keep their jobs. Most of the money is basically going to keep the company inefficiently afloat, and then the same executives will stay in place, keep the business, and be able to basically, once we maybe pull out the other side of this in a very inefficient way, keep lining their own pockets. But take the airlines, for example. After this subsides, this world health crisis we're happening, people are gonna fly places. So if these airlines go bust, and the shareholders, which are predominantly rich people, and the executives have to go, so the shareholders get wiped out, and the executives basically get wiped out, get basically removed from the business, and then more responsible people come in. Either they come in, or just the aeroplanes, the assets, the flight slots on the airports, they're bought on the cheap by new companies or responsible companies, airlines are still going to fly. Do you know what I mean? There will be no correlation between the amount of air traffic and the amount of airlines that are either saved or not saved during this crisis. So what that means is that all those people that are going to have jobs coming out of this crisis are going to have, there's going to be the same amount of jobs, because they are two different, they're two like independent variables. Like, the amount of airlines that stay in business now isn't going to mean that there's going to not be any flights. The airplanes are still going to exist, the airports are going to exist, the demand to fly and travel is going to exist, maybe at a lower rate, but that lower rate is going to be based on the health crisis, not going to be based on the amount of airlines. And those people are still going to have jobs. They're going to have jobs, basically. So there is no need for the government to bail these companies out, bail these rich people, these shareholders out, to keep these people in jobs when they can just pay a lot less money than it will cost to keep an inefficient airline afloat. They could just pay them that monthly amount like they're talking about doing, those workers, and then when an airlines start again, they go bust. We get new efficient, better run airlines, and those people then going to get jobs with those airlines. I mean, it is that simple, and that's using the airlines as an example. So there is no need for Wall Street, these big corporations, these debt holders, there's no need for these guys to be bailed out. And then one last aspect of it, if you do bail out these companies, then like I said, that's not free market capitalism. Capitalism is what makes companies inefficient and responsible, and basically bailouts make companies inefficient and irresponsible. So you're going to end up coming out of this with lower economic output, with basically just a debt burden on these companies. The fact they've got people that running them that aren't necessarily the most prudent people, aren't the best people that run these companies. They're just basically got connections in the central bank and government to lobby them to get bailouts, to stay in their jobs, to then get rich. They're not running the company in the most efficient way possible. So if you're not running the company, you're not running your economy and your businesses in the most efficient way as possible, then you're not going to basically do as well. The economy isn't going to do as well as it should do, basically. There's going to be that drag on the economy. So yeah, bailouts, these bailouts for companies are just ridiculous. I mean, fair enough, we have got to give people bailouts. We've got to give people money because they can't starve, they have lost their jobs, they can't go to work, and that's fine, and that isn't necessarily the greatest thing to have to do. People should have been responsible and have savings, that's fair enough, but they didn't. They made a mistake. We can't leave them to die, basically, but you can leave businesses to die. Businesses aren't people, they can die. The jobs will still be there when we come out of this, that won't be affected by it. The people may even get paid more, the jobs might be better, the company be more efficiently ran. Do you know what I mean? There won't be the people at the top having to siphon off so much more money for themselves, or so much money to repay debt that they had to basically borrow extra to get through this crisis. They won't have the burdens of all the past mistakes to basically weigh in on the business. And yeah, that's basically how I see it, guys. So you kind of have to understand that this is ridiculous. And yeah, like this article says, it's basically corporate socialism. So this is what we had since 2008. We have had socialism, but for the rich. Socialism for big businesses. Socialism, so basically they privatize their gains. They all take all the money, take their gains, and then they, as soon as they go bust or get into trouble, they basically socialize those losses, and the taxpayer has to pay them, which is it's just not acceptable, basically. So anyway, rant over on that. More videos to come today. I hope you guys learned something there, and I will speak to you all later.